In this video, traders, we're going to answer the age-old question of, is a signal service useful when trading? Stay tuned. Hey guys, warm welcome to you. Thanks for tuning in. All right, so this is a really common question, and it's a question that is pretty sensible. You see this when people say face to face, hey, should I bother with the signal service? You see one side of the person says, no, never use signals. The other person says, signals have been the best thing ever for me. So I want to digest and break down signals, the broad term, but I've split them into three. I've split them into a full service, a signal service, and a research service. And look at the pros and cons of each, because I don't think we should dismiss anything in trading. We should look at it and make our own minds up whether it's of value to us or not. Right, so let's go. So let me just distinguish the definition of each of these. So a full service is perhaps a over-the-shoulder room, or perhaps it's something where you're getting more than just a signal, i.e. a signal being, hey, I'm buying Dow here at this price, this is my stop loss, this is my target, this is my size, this is what I'm doing. That would be a pure signal. A full service is really someone who says, okay guys, this is what I'm considering doing. I'm considering buying at this level. I'm considering putting my stop here. Why am I considering buying at this level? Well, you know, this is set up in this way. It's this chart pattern and we're in this position, etc. I think my risk has got to be here. This is a sensible place for a stop because the ultimate daily range is this, or, you know, the thought process behind it. And then talking through some targets. So, okay, maybe I'm going to have my target here, my target here, my target this. And they give you the full kind of theory behind the trade, and additionally there's probably some kind of mentorship and coaching with it. So there's like a lead trader, if you like, in the room or in the webinar, whatever it may be, and they're kind of coaching you through it. So perhaps they're saying, okay, the market hasn't quite got to my position, so I'm going to move my stop up, or sorry, my entry order up, or I'm going to cancel my order, I'm going to look at this trade instead. It's the thought process. So it's constantly kind of dialogue with the thought process. Now, it takes a certain kind of trader or character to do this, because the thought process is often very personal for us. I know you don't know about yourself, but if you're sitting there, sometimes you're thinking things through, but the act of then being able to share that with others is reasonably challenging. So if you find somebody good with this, then that might suit you. Now, the pros of this, of course, is that you're getting the full process. The cons of it are that you may well be influenced negatively for trades that you don't believe are correct. So let me give you an example. So let's assume that this guy or girl is a reasonably good trader, or is good at giving these signals, good at giving the theory, and just helping you out in general. So to make that assumption from now, okay, that could not be the case, but let's assume it when we're going through this stuff. So assume that you think he's okay or she's okay. Now the problem you might have is that if you are trying to get your own strategy and system, let's look at an example. Let's look at a crude oil example. You think, okay, I think crude oil is, I'm waiting for a long on crude oil. Let's say, for example, it's been hammered to the downside. You're waiting for a long opportunity, and that's your thesis. You're like, hey, I think this is a bit stretched. It's not ready yet, but I'm looking for some kind of signal that we might turn up. So maybe a double bottom, and then I'm not going to go in yet. I'm going to wait until I see perhaps a bullish engulfing, something like that. So you've got a theory and a thesis, but you know you've got to be patient until you get the opportunity. However, the person doing the trader doing the full service is saying, okay, well, crude oil is a good short now, and he's maybe looking at intraday chart and looking for a press into the close, whatever it may be. Now, they're both valid theories and theses potentially, and both could make money. But the danger you've got is that when you're trying to do maybe an intraday short with a longer term swing long, that's when things get tricky, because you're trying to, you know, look at two different things, and it's hard enough as it is to keep your conviction with trading when you see a lot of evidence both ways. Very rarely or never is a trade just a one-way street, right? There's always an argument for the bear, always an argument for the bull, and when we're trading on one side or the other, we kind of put more weight onto that argument, and the best traders will accept the other side but still put more weight onto the bull side. You know, trades that I go into, I try to is look at both sides of the coin and go, okay, where could it go? Why is the reason for this? Look at it and then say, well, actually, I still think it's a buy. I'm buying here, but my risk needs to be set at this because this still could win. The bear side could still win. And that's the point why you go in and why you use risk management. We're digressing slightly. So you've got to be careful that you're not allowing it to cloud your judgment in terms of, hey, my conviction, I'm waiting. So there is the kind of conflict of, well, I'm trying to do this, I'm trying to do that. Even on intraday basis, we could use that example on intraday basis. You might think it's bottoming out and you're waiting for your opportunity to go long, and this guy's or girl's hitting it short. In which case, can you grow? Are you more influenced by this person because perhaps they're more experienced? So it can be tricky. However, on the flip side of that, it can be useful if you're starting out and you just want some ideas on where to go, on your or maybe you've been trading for a while and you're lost, you want to start from the beginning. Finding someone like this can help you. You can sit there, you can watch, you can learn, you can disagree as well. You don't have to sit there and kind of do everything they do and be a cheerleader for the guy or girl. You can say, okay, you know what, I want to see the thought process. You know what, I don't agree with that thought process. I don't agree with that trade. Let me start jotting stuff down. So you can use it as a learning tool, and they're not going to mind, unless there's someone who's out there just for to be a guru. They're happy for you to learn from them. Of course, you're probably going to be paying a fee for this service, so fair's fair. You learn from them, you either agree or disagree. So that is there's pros and cons to that, and you've got to obviously find the right person, but not dismissing completely. I know these kind of things get a bad rap, and you don't want to rely on them solely, but just being able to have someone who's actually in the business that you're in, looking for the same things that you are, in the same style, the same strategies, the same markets, going through their thought process, is worth it alone. So whether you agree or disagree, you can get some value from that. Okay, so that's a full service, right? So let's look at now the pure signal service. So a signal service is literally with no explanation. It's long crude oil here at $50, 10 cents, stop 25 cents away, target 100 cents up. We'll scale out here. So it's just the actual mechanics of the trade, the operations of the trade, if you like. There's no real theory behind it. There's no thought process, no talking through. It's just literally an order that they're putting into their broker that's then shared with you. Now you can see most of the time these are going to be your difference in price because these are someone's time that you're looking. This is more of a signal. Now, the danger you have with signals is that you can become too reliant on them and you don't know behind the strategy. You don't know what's going on under the bonnet. So the signal could be, over a couple of years, a nice profitable system, but you don't know, hey, is there vulnerability there? So one caution is to check and double check. What is the strategy? If it's a scalping strategy, are the stops, do they make sense? Are they not using stops? Are they pulling stops out? Are they doing anything that's super risky? If so, steer clear. However, if it's something in a market that perhaps you're, trying to get a feel for, then, this is not a bad thing to do. As long as you've done your due diligence and you've made sure that the signal is, has got a good chance of success, and you've kind of done some back testing or checked to the history, etc., or you just feel like it's a good strategy. Maybe the other thing is the signal might say, hey, this is the strategy, and we will alert you when these signals occur to save you scanning for yourself. In which case, it's just purely a service. You've already bought in, so to speak, to the strategy, and you're saying, okay, well, alert me when I get bullish engulfing candles, for example, on this with this filter system, etc. In which case, that's just paying for a service. So this can be good because it saves you a little bit of legwork, and if it's something that you think is a good strategy, has got a good filtering process, all this kind of stuff, it saves you some time, right? You're there, you get the signal, you can look at it, and then you can bring it up. Then you can look at it, you can assess it and decide for yourself, would I take it under normal conditions, would I not? Now, some people say, well, you should be trading all the signals that you're given with a specific strategy. Yes, if you're fully bought into that strategy, you should, because you need to get the same results of that strategy to take all the signals. However, it doesn't say you have to be fully bought into the strategy. You can do the hybrid and say, well, actually, this would be nice to get some signals on crude oil so I can be alerted and go in and do my own research on it. Comes through with a buy order, you go, right, pull up the chart. What is this? Right, so buy here, so stop here. Does that make sense to me? You know what? That looks like a good trade. I'm going to go on that. I'm going to use my own position sizing, etc. Off I go. Or you look at it and go, you know what? I don't really see what he's seen there or she's seen there, and that's not for me. I'm not going to pull the trigger. And so you don't do it. So you can use it as purely, a flexible tool. And which brings me very nicely to this research. Research is almost like what a hedge fund would do. And this is kind of how we can operate with all of these in a certain way. You know, a hedge fund will receive ideas, will receive research, will receive trade, anything, information, and the manager, the portfolio manager, will make his own decisions on that. So there'll be a research paper from the researcher or the analyst that says, hey, I think this stock is a great buy. Here's the theory for it. Here's the setup. Here's what we think, maybe not so much for the hedge fund, i.e. a specific setup, but this is what they might do if they're a research service for retail. They might say, this is a theory. We think this stock or this company or this index or this commodity is a good buy. This is where we believe is a good buy zone or buy area. This is where we would come out of it. And these are the reasons why. So they'd have a summary, and then maybe go into more depth. And it'll be like a 3 or 4 page PDF with some evidence, with kind of supporting the trade idea. Very similar, like I say, to hedge fund research, where the internal analysts will present the manager with ideas. They go out and they do a lot of research, they speak to the CEOs, all this kind of stuff, and they present the idea to the manager, and the manager picks the ones he likes and does the deal. That's how really I think these all can come into play. If you present yourself as the manager, which you are the fund manager of your own funds, whether you're managing 500 quid or whether you're managing 500 million, you're still the manager of your own funds. And you can take this as, you know, if you find good ones, they can support your trading, whether you are just getting signals that alert you to something that you might want to trade, whether you are kind of using someone's knowledge in something to go through their thought process, or whether you are even, you know, doing the hedge fund model, so to speak, of getting research in and making your own decisions. Now, do you want to have all of these and have loads of noise coming in? No, you don't. That's the worst possible thing. You want to pick ones that really complement your trading and support your trading. You want to make sure they're the right kind of character, the right kind of strategy, the right similar thought process to you, and then trade. Now, of course, you could, if you wanted to, find someone who was completely opposite and you thought was dreadful and fade them, but that's another kettle of fish. If you find someone who's just really bad at signals, then perhaps you could use them as a contrarian view and say, you know what, this guy's awful. He seems to be trading emotionally. The signals are just poor. Why don't I just flip it on the other side and take the short when he's going long? That's another topic. But anyway, guys, is a signal service useful? When used correctly, I think so. I don't think we should rely on them. I don't think we should cloud ourselves with all sorts of stuff and just piling in newsletters and research and signals and all this, because you get too much noise. But one, perhaps two, that support you and, like I say, are in the same kind of environment that you're trading, of the same strategies and similar things, then they can help. And you can use them, you know, as and when, and dip in and out of them as you feel that you need that assistance, and kind of take some of the load off you with decision making, with idea generation and that kind of stuff. Anyways, let me know your experiences with signals. Have you tried them? Have you had good experiences, bad experiences? How did it go for you? Stick it in the comment section below. I was interested to hear how you guys have got on. We've got a lot of collective experience out there. Whatever you're doing, take care, keep your risk managed. Goodbye.